You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the option block.
All right, everybody. You guys know the drill. You know what that tunage means. It is time. Yep, we're live here with the Option Block, noon Central, 1 p.m. Eastern. So wherever you're listening to, that's when we're live. You can listen to us after the fact on the app live via Mixlr, in between somewhere on whatever platform it is you like to listen to our shows. However you listen, make sure live after the fact. We don't judge. Just send in those questions, those comments. We do like to hear from you guys. It gives us the pulse of what you're looking for out there. And you guys always throw us some crazy curveballs, which we love as well. All right, joining me on the program today, let's see who we got. Uncle Mike Tussaw out there on assignment today, listeners. So a rare episode without Uncle Mike. I know you'll be shedding tears, but we'll get him back on Thursday. Don't you worry. In the meantime, though, we got holding down the pit seat, a.k.a. from the land of the pit, the greasy meatball himself, Mr. Mark Sebastian. OptionPit.com by way of Carmen Line Capital. Mr. Pit Seat, how's it going, sir?
You know, it's going great. I had a fun weekend of rail fanning at the Illinois Railway Museum.
Rail fanning? Were you standing next to a train and waving it, cooling it down with a fan? Is that what that is?
No, I actually just discovered this is a thing, but I wanted to take my 3-year-old to go see trains because he likes trains because he's 3. And it was apparently Diesel Day. And so
of course it was Diesel Day.
It was Diesel Day. So there were, I would say, the ratio of kids under 5 to men over 55 was maybe 10-1.
Yeah, there's a lot of a lot of older men at the trains.
It was like, I was like, are you kidding me? And so, I've got Valentino being like, Metro Train. Meanwhile, these guys are like, it's a 1953 Nebraska Zephyr from, with this model, this call sign, blah, blah, blah. And like, they had these seats set up that, they all brought seats like they were going to see a concert, and they're sitting there by the tracks watching trains. The part that kind of really disappointed me is most of the old men did not bring like Milwaukee's Best or some sort of alcoholic beverage to enjoy while rail fanning, because I would think that would be like, one of the best parts about rail fanning was, crack open a beer, sit there, watch metro trains, who could ask for more?
So is rail fanning like the American version of Trainspotting then? Is that what it's supposed to, is that what we're doing then?
Trainspotting is doing heroin.
Yeah. Shall we say the non-edgy version of it?
Yes.
The euphemistic version of it, shall we say?
I don't know. I don't know. I don't know that one, but let's say yes.
Yes, let's just say yes. But you're right. There is a huge train aficionado subculture out there, of which I've never been able to grog onto. But hey, some folks like it. Go for it. Thomas the Tank Engine. He's more than just the kids. He's serious business. That's why those train sets. Those, you go to a store, you see the freaking Thomas sets. They're like $400. There's no way parents of 5-year-olds are buying that. So there are all sorts of interesting audiences out there, of which ours is certainly one. And joining us to help educate and perhaps bifurcate, because he's been known to do that, of course, the last emperor himself, Mr. Konstantin VRANDOPULO, holding down the Fidelity hot seat. Konstantin, Mr. Last Emperor, are you here to separate our audience perhaps into Eastern and Western halves today, sir?
No, not at all. I'm definitely more of a mediator type. So I would say that I'm here to maybe bring people together rather than separate them apart.
I like
How
it.
is that?
A unifier rather than a divider. We'll see as we get rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Let's see if the trains can run on time here in the trading block. And they're certainly not running on time in the market today. Well, I guess it depends on which side of the market you're on. But if you're Uncle Mike and you're in the bullish territory, not so much today. Most of the major indices off pretty substantially. The Dow leading the charge today. How often do you say that? Dow leading the charge to the downside, off pretty much exactly 1%. S&P off over 0.75%, about 0.85 or so. And the NASDAQ just a tick under 0.75%. So all of them pretty heavily in the red, spooked by additional exacerbation of the trade war, shall we say, coming out of the White House. All of that not exactly talking up. What is talking up, though, is gold and crude. They're getting a little bit of a lift today. Still WTI shy the 55 handle, 54.81 coming into Showtime listeners. So WTI still off, but nowhere near threatening the 50 handle like it was just on our TWIFO show just a few days ago. And all this red on the screen, listeners, means green is on the vol screen. VIX cash vacillating around all over the place, breaking the 20 handle again today, getting up to, looks like about 2020 was the high today. That was right after the opening bell there. The sell-off is kind of in its teeth, and it kind of settled off, got down to about 19 and a quarter, and now we're back up to about 19.75. That puts us up about a little over 2 points, about almost 2.25 points from where we were last show. Our old friend Volatility, aka VVIX, also getting a lift today. It's up to 104.5, up about 5 points from where it was on our last show. VXX also getting a lift. Maybe you're not liking that if you're short a lot of it, which I know a lot of you are, or perhaps you are liking it because it resets the short dial up over a point, about 1.25 points or so, to about 27.80 or so. So since we're talking vol, let's start in the meatball land, sir. What's up with you guys? What are the crazies up to in this dialing up the vol? It's kind of like the old script, isn't it? Again, Monday, let's say, exacerbating comments out of the White House. The vol is up again. Haven't we seen this script before, Mr. Meatball?
Yeah, except the script, every week it's been kind of less and less, since that big sell-off, it's been kind of less and less, more muted. Markets are becoming kind of immune. You've got the VIX stronger today, but really vol futures are not doing very much. And so, you're getting a kind of a meh from the overall market. I mean, at the lows of the day, vol opened on the highs and has not been anywhere near there since, nor can it get near there. And so I've been, a little interested in the lack of interest in in fear that we're seeing right now. Markets just don't seem to care. And I think that is usually a sign that things are starting to maybe slow down and wrap up here a little bit. I will be really fascinated to see how tomorrow plays out and what news. But, I would say that these Hong Kong protests are a new wrinkle for markets. They seem to be more interested in the airport shutting down than they do in just about anything else that's going on with markets. So that's that is maybe the piece that could add a little bit more vol here. But yeah, no, it's a big old who cares. I was talking to our old friend Tubby, and there's not a lot of activity on the institutional front. I've seen no VIX orders. I've seen very little SPX. But the only SPX trade I've seen has been a bull trade.
There you go. You're just about to tell us what the bullish VIX trade was, and we lost you.
No, a bullish SPX trade.
It was okay.
It was a bull 1 week call calendar, and so that's really about all I've seen of any real size. It's been really slow. Vol does not really seem to be responding. VIX futures don't seem to be responding. So I'm wondering how much more there is to this, and really what is the vol upside here without some sort of catalyst for the bears? I don't know. There does not seem to be a lot going on for the bears right now.
Well, you're right. And it's kind of like what I mentioned at the top of the show. We have seen this script play out a few times. So the first time it's, oh, my God, head in my hands, what's going on? And vol explodes. And then we see it again, maybe a little bit less. And now we see it a few times. And, yeah, you're right. The reaction is going to be a little bit muted. Of course, August, the middle of August here, heading into the doldrums, the dog days of summer. Not exactly hot times, pun intended, in the market as well. So a lot of that kind of playing a bit of a factor. But, yeah, it is interesting to see how we are seeing that same script shape up. We'll see if it plays out the same as last week. There's always a new wrinkle to be added in there. So not every week is exactly the same. But still, interesting to watch how we're kicking it off yet again. The same way we have a lot of late. So Mr. Last Emperor, you haven't been on in a while. I know you've been chomping at the bit to get back on over there in the Fidelity Active Trader hot seat, sir. Let's talk about those active traders. What are they up to? It's otherwise relatively volume-wise, not a rock'em sock'em robots. Movement-wise, it kind of is, but volume-wise, not so much. What is lighting up the tape? You guys always have some interesting nuggets of activity over there. What's lighting up the tape in Fidelity Land today, sir?
Yeah, thank you guys for having me back on. It's always a pleasure. I'm definitely. Well,
Mark wanted to kick you off. I had to permanently.
You had to argue me down. I was like, the heck with that Last Emperor.
I said, there's no way I'm doing the show without my favorite emperor, Diocletian.
Yes, he actually did say those exact words.
Well, I'm always okay to yield the mic to you, Mr. Reedbull, so no troubles there. I was going to say, I'm actually noticing that, obviously, in terms of the magnitude of moves in the S&P, we've been seeing, substantial back and forth. But, maybe this got something to do with the fact that we have, a monthly expiration coming up into Friday in the S&Ps. We'll see if anything changes, right, following that. And maybe later on down the show, we'll talk about some of the things that we're looking forward to for the rest of the week. But what's moving in the markets, as well as what Fidelity customers are trading, a few names that I know that I certainly mentioned before on the show. The number one hotspot is taken right now by ROKU,
Roku.
mid-cap company. Definitely leaning towards the buy side here by Fidelity clients, 60-40 right now. So definitely towards the buy side. Interesting company. I know that I've talked about it before. Right now, mid-cap size, around $14 billion or so. Kind of tends to defy the laws of gravity here as of late. It's up on my last check close to 300% year to date. So it's definitely been a pretty spectacular performer. I think it is up today on the Needham analyst reiterating a buy with the price target raised by $30. So they went from 120 to 150. I read the report actually, and the analyst was mentioning that in 2019, 3.5 hours a day is spent viewing Roku content. Well, I guess content on Roku. Roku currently has 36% of the connected TV homes in the U.S. So that kind of surprised me a little bit. It seems like it's actually a much bigger player than I was anticipating. Stocks trading above 20,5200 MA. RSI is getting into that, top of the range, right? In momentum terms, it's absolutely skyrocketed after it reported earnings last week. So it's currently at 76. That's the 14-day RSI there. And what I did want to point out is that referencing that trademarked indicator from John Bollinger, right? The Bollinger Bands, we talk about volatility all the time. And in this case, a realized volatility, stock is trading above its 3 standard deviation Bollinger Band, which is based on the 20-day MA for its average, right? So that's, 99.7% of occurrences, and it's currently outside of that. So that's telling you what sort of a run the stock has been on. I would definitely advise everyone who's trading it to be mindful and cautious, right? When you see moves of this magnitude from either direction.
Feels a little stretched, right?
Yeah, no question about it. So if you're trading it from the long side, make sure that you have a pretty coherent risk management technique there. In terms of the options markets in Roku, it's definitely trading above average today. Traded 122,000 so far, and we still got a few hours in the session to go. I think 90-day average in there is around 90,000. So it's probably going to be doubling the average today. Not a whole lot of massive activity that I saw in today's biggest trades. I know that August 30th contracts on the coal side were pretty active today. The second name that I wanted to mention is AMD, and I know that we keep talking about it. Fidelity clients do trade this one quite a bit. Definitely leaning to the buy side as well, 60 to 40. I know that Cohen reiterated outperform, raised his price target from 40 to 42. Stock is trading at 33, and it's actually down 3% today. One of the best performing stocks in the S&P. I had to go back to my filters, the Fidelity filters that I have set up, and this one is actually up there, top 4 best performer in the S&P, up 70% year to date. Trading right at around 14-year resistance band, and that's at this level of 34 to 35.5. Has this kind of crazy longer-term diverging RSI, and all we mean to say as technicians by that is that price is trying to carve out higher highs as it's facing this resistance, but momentum is actually slowing. So it's got an RSI reading of 56 right now, and the time prior to its earnings announcement on July 25th, when it was trading at the same price, RSI was in the mid 60s there. So you have this diverging RSI. Definitely on my watch list at these levels. It's been trying to test that resistance over and over. It first got up there in 2006. And then, again last year, and here we are again, right? So it's kind of wait and see. Doesn't have enough momentum to break through. From the technical perspective, would definitely be watching this band and a break maybe of this diverging downtrend in momentum as well. In terms of options, I would say above average day there, traded 300,000 contracts. It's more of an active, more active than a lot of the names out there. 90-day average is around 325,000. Obviously, we got a few hours to go here. The third one is the ride-sharing company Uber, right? A newcomer to the public market space. Is down, actually, trading 6.25% right now at 37.5. JP Morgan raised the price target 54 to 56 and maintained the outperform rating this morning. I kind of figured, hey, it's interesting to see, and a raise in the price target, and especially it being so far away from the current price of Uber, where it's trading, and stock is still down 6.25%, continues to get smashed down post its earnings announcement. Announced earnings last week, much bigger than anticipated loss. I think it was over $5.25 billion for Q2. So continue to spend a ton of money. I find the chart very interesting. Obviously, company went IPO just recently here. IPO'd at 45 in the middle of May. On the second day of IPO, hit a low of 36. So we were kind of looking at it and saying, well, where are those rules of the stabilizing bid, right? So a huge drop and then kind of sideways action for a long time. Going kind of has like last week.
Kind of has like a Facebook. Doesn't it kind of have like a Facebook feel to it? You remember, Facebook IPO'd at like a really high price, then managed to hold it for a day, then kind of drops and drops, kind of flounders around, dropped again, and then got to a level where it got really cheap. And if you didn't buy then, you never got another chance to buy again because it just ran off. Obviously, totally different business model, different company, but definitely has that kind of feel to it. I don't know if you kind of saw the same thing, or if you thought Mark, the same thing.
Taking it back, right? I think Facebook was 2013, right? So it was probably like beginning of the year, 2013, and definitely had a similar sort of structure. This one at least has regained the IPO price and went a little bit higher, traded sideways for, several weeks, and then obviously fell out of bed with the broader market. Mark, what I found interesting is that going into the earnings announcement, the stock was actually up 10% on that day going into the announcement. That was August 8th, and it was kind of on the heels of the Lyft IPO reporting the day prior and actually beating expectations. So it was like, hey, we'll run into the report and then, an absolute collapse. So from the high of the day of on the close there on the 8th, is down around 15% right now. So definitely underwhelmed, I think, in terms of the numbers, and Wall Street is not taking it kindly. We'll have to wait and see if this 36, the low so far from that second day of IPO, holds here. It traded pretty close to it on the day lows today and caught a little bit of a bid. But I agree with you, Mark. It has that similar feeling, right? Not frequently companies of this size that go public, we see this sort of action, right?
Kind of hyped because it's like a company that the media kind of gets, right? You know what I mean? Like that was, I actually remember I walked in I was doing a Bloomberg hit on the day it IPO'd, and the person asked me, like one of their reporters that worked there was like, how high do you think Facebook's going to go? And I went, it's going to drop from here. And they were like flabbergasted. And, but it was because, they tend to kind of over-report on things they have a strong understanding of. And I can tell you two things that like media people get is media, Facebook, and getting a taxi and or Uber because they use them all the time. So that's I think leads to these big companies, well known, getting this kind of price action. But that's cool. And have you seen any interesting option trades in Uber, or has it just been kind of stock trading for you guys?
So, Mark, I know that today it's definitely trumping the average, right? It traded 86,000 contracts so far, I think, since it came IPO It's been in the low 50s for a day, but there was some pretty serious size. What looks like maybe a calendar trade in the 35, 37 and a half AUG SEP put spread traded 7,897 times. I definitely don't know if that was a Fidelity client. I doubt it. It seems like it's probably an institutional, account size. But that was an interesting trade in there, and definitely bigger than everything else that hit the tape today. That went off right before the show started at 12:41. But yeah, that kind of sums it up here for the Fidelity board. 3 names. I know the 3 names that we definitely have talked about before, but they continue to be darlings. Some up huge, others down big. So.
Yeah, those 3 names, you're right. They tend to dominate a lot of the conversation of late. How much? $1 billion plus in a quarter. That's an impressive achievement for any firm out there. So yeah, the market's continuing apparently to tolerate and smile on that. Let's see. Uber coming into today. How are they faring in today's sell-off? They are, of course, I had it up. I just had it up. There we go. All right, that's better. Yeah, off about 2.5 handles, about a little over 6%, about 6.2%, down to about 37.5. They can only shed billions with a B per quarter for so long. Market, the VCs tend to have a little bit more patience than the investing public does. So we shall see how all this fares. And let's see, picking on how things fare, let's see if all those names you mentioned, if they're lighting it up in the broad market as well here. Speaking of the broad market, let's kick it off looking at the indices. Like I mentioned today, it was a lot of underlying swing out there, not so much on the volume side, and that's pretty much what we were seeing coming into showtime. VIX cash, or I should say VIX cash moving, VIX options, about $1.50 on the tape coming into showtime. ADV north of 600,000 right now, so it has shot up quite a bit over the past couple of weeks. It's shot up pretty much 50%, the ADV. It was right around threatening to break 400,000 to the downside. I think it was like 403, and now we're at 638,000. So it has increased quite a bit over the past few weeks. Today, not one of those days. SPY, same deal, a little bit closer to their ADV out there. The ADV is about 2.7 million, and they're doing about 1.35 million today. So pretty much half of the ADV on the tape. So a little bit more out there in SPY land. SPX, 513,000 contracts on the tape. ADV about 1.3 million. The Qs, a little bit shy of 250,000 contracts on the tape, ADV about 670,000. And the Russell, a.k.a. IWM, about 130,000 contracts coming into showtime, ADV about 412. So that ADV has sprung up a little bit out there as well. We talked about on recent shows how when it's hitting the fan of late, it seems like single name volume kind of withers a bit and it all flows into the indices. We haven't seen a ton of volume outside of the SPY, not a ton of volume out there in the indices today. Let's see if it's flowing back into the single names. Let's start with our top 10 hot, most active options out there. Number 10, just barely clinging into the top 10 today, our old friend Mr. Tesla, 93,000 contracts on the tape. This is updated as of a few minutes ago, so these are fairly recent numbers here. Bank of America, number 9, 101,000. So again, usually if you're not cracking triple digits out there, if you're not cracking into the 100,000, then you're not really making the top 10. Today, a lighter day, Tesla can squeak in with 93,000. Bank of America, number 9, 101,000. Netflix, number 8, 102,000. DXC, number 7 there with exactly, I was saying, actually, so kind of tied with Netflix for 102,000. They are an American IT services company, DXC. That is DXC Technology. Number 6, APA. Some newcomers here. Again, you got a light day, you get some newcomers in the top 10. APA, number 6, 114,000 contracts on the tape out there. Number 5 here, well, the aforementioned Roku maintains its mind share out there. There's a lot of people out there. $121 on the tape. Number 4, GE, another one that's kind of been a perennial top tenor of late. 146,000 contracts on the tape. Number 3, all the way up to number 3 today, BABA, climbing the ranks. 191,000 contracts on the tape. Number 2 and number 1, you can probably guess one of these two names or not both of them. Just the question is which order they're in today. Today it's Apple, number 2, 207,000. That means number 1 is going to be AMD. The other one that the last emperor said, you folks at Fidelity and clearly in the full market are loving today. Nearly 300,000 contracts on the tape. Let's see, the most biased flow, actually, Bank of America, 72% of that 101,000 contracts coming on the call side of the ledger. We also are in earnings season. Let's hit it really quickly and we'll come back. Actually, we'll save it because we're kind of coming up against it here. We'll save that for around the block. Let's keep on rolling right now. Let's get a little weird. Let's get a little wild. It is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Before we even get into odd block shenanigans here, Mr. Meatball, we buried the lead here. I know you saw this. I know you've already put your bid in for us. I don't even need to ask, but I should probably remind our listeners, in case they are interested, today, right now, for the first time ever, you too, including you, Mr. Meatball, can snag an exclusive lifetime pasta pass from Olive Garden. How many did you buy today, Mr. Meatball?
I bought them all. I'm going to plan on putting them out on the resale market. And I'm going to make bank from all sorts of people that are willing to pay a lot of money for pasta that's worse than Chef Boyardee.
This can't be right. It says they're $100 for a lifetime pasta pass?
It's a year pasta pass. It's not a lifetime.
This says exclusive lifetime pasta pass.
All right, $100.
Oh, no, I'm sorry. You can buy the regular year one and then opt in to the lifetime version. Guess how much the lifetime upgrade cost?
1,000?
You'd think it'd be at least that, right? Nope, 400.
No. 400.
400.
Well, there you have it.
So you're in for a whopping $500 for a lifetime pasta pass.
Well, they're thinking like you're going to buy wine, you're going to buy all your other who doesn't? I'm going to pay my $9 for a glass of Stella Rosa from the Olive Garden. Who wouldn't want that? For at those prices. So
I get a sweet rosé with your bowl of endless spaghetti and meatballs. Apparently.
Yeah, I know. I mean, it's I bag on Olive Garden a lot because it's not good. That is all.
Somehow I knew you'd have just a boatload of those in your back pocket today, just to hand out to the crazies in the pit chat as a reward for enduring all the madness over there at Option Pit. You get to have a nice lifetime pass. So head on over there, get yours as we keep on rolling. Let's see what people are getting out here in the weird side of the options market today. We're getting weird already, listeners. We're starting off, well, not even with Olive Garden, but Livent Corp, ticker symbol LTHM. This is a chemical manufacturing company out of Philly, because that's where you want all your chemicals made, in Philly, right in downtown Philly. That's safe for everyone. I'm sure that's just their headquarters. This is going to be on the cheaper end of the spectrum. Trading today, $6.73, off about 85 cents or over 11%. So not a good day for Livent Corp. Let's see if it's been a good year for them. A year ago, they were trading substantially north of where they are right now. They were trading nearly $17, and then they kind of had a bit of a rough year. They rallied briefly up to, looks like about almost 19, and then they sold off down to 16, then back up to about 18 and a half, almost 19 again. Actually, 1917. Their 52-week high actually is 1990, so that was around December of last year. We all know what a quiet, tranquil time in the markets last December was. Then, of course, they sold off like everybody else on Christmas Eve. They hit 1230, but that, unlike most names, that wasn't their low for the year. No, they kind of continued. They kind of floated there for a while, and they sold off again back in May down to $9, then $7, and then $6, and it's kind of been floating around this level ever since. Actually, recently they were down a little lower. Recently they were down to $5.64, so they were $1 shy of where they are right now, and they're off 85 cents today. So they've had a couple of $1 bounce just in the past week or so. So obviously they had earnings, and clearly the market liked it until today. So a weird one, a chemical manufacturer. I guess they're kind of like a biotech in that sense. Their chart's a little weird. And let's see what we saw here in the option space, if that's going to be equally weird. Oh, well, some put love. Now, first, it seemed like that put love was kind of weird, but maybe in light of this recent paper, it makes a little bit of sense. We saw 5,300 contracts of the SEP 5 puts going up for 14 cents. Paper gobbling up the offer there, or close to it. I said 5,400 times. This was opening And if you're wondering, that amounts to pretty much about almost 26. That's 25.9 times the ADV out here in this name. So yeah, that qualifies certainly as unusual. Our friends over there, the Flow Master, noting as well today with Trade Alert that they also hit their 52-week high for their at-the-money implied vol. This trade driving it up a little bit. Obviously, also worth noting, this is a hard-to-borrow name. So a lot of that conspiring. When you see a hard-to-borrow name, usually you're probably playing on the put side, and that's pretty much what we saw today. Opening 5,300 times on the 5 strike. Mr. Meatball, kick us off. Short sale, restricted name, doing about 26 times this ADV, gobbling up some puts. There are earnings, but they just had them, obviously. So the next earnings are November 4th after the bell. This trade will not have them in it, so it's not an earnings trade. Looks like they're protecting pretty much the low of the year is 5.5. So they're buying in below the low. So what make you, sir, of these somewhat aggressive out-of-the-money puts here in a short sale restricted name like your favorite, Livent Corp?
In West Philadelphia, born and raised. I spent making chemicals how I spent my days. Then some put buyers, up to no good, started buying puts in my neighborhood. I'm sorry, a little Fresh Prince of Bel-Air.
How long have you been working on that one? The whole time I was talking, probably.
I since you mentioned it was from
yes,
a Philadelphia-based company, I've been working on it. So, it sounds like this is a worried investor would be my bet. My guess is that this is someone's long. So this is some sort of hedge play on the name. I'm not thinking it's they're naked. This is probably stock tied. Someone says, you know what, if it gets down here again, I need to get out, or at least, stop getting my shirt handed to me. So that's kind of what this smells of. Not to be too punny with a chemical company, but that's what I think was. That's what this compound is. It's actually a compound trade. It's a chemical compound of long puts in stock.
I need to talk to you more chemical names more often. You're just full of the chemical and or Fresh Prince puns today, sir.
Well, you mentioned Philadelphia. That's the only place you can really go, right?
That is literally the only thing you could talk about.
Or Villanova, I guess, where I went. So you could do that. That is all that Philadelphia has.
Villanova or Fresh Prince, literally the only two things ever to occur of any resonance in Philadelphia. All right. If LTHM, if that name didn't do it for you, if that wasn't the THM you were into today, don't worry, we got another one for you. We've got ATHM. How about them apples? That's Auto Home. Ticker symbol, of course, ATHM. This one kind of bucking the trend today, rallying where everything else is selling off. Auto Home saying, "Niet. We shall rally." I'm not sure why I'm talking like a Russian. This is the Chinese company. They're trading 77.5, up about 1% today. There's a good trend here in company descriptions, which is usually they're extremely flowery and tell you nothing. This one is just Auto Home is a company. So there you go, headquartered in China. I'm guessing they didn't exactly contribute to this description. Today, 77.5, like I said, up nearly $1 or about 1%. A year ago, this thing was trading 83, so a little bit north of where it is right now. Then this one's all over the place, this chart. This kind of gets into what we were saying before, Mr. Meatball, about how these auto suppliers and auto type names are a lot more volatile than you think. We kind of discovered that on a recent show. And this one, I guess you add in the Chinese factor, that becomes even more volatile, because this chart's kind of all over the place. Then within by October, they're trading down to 63. Then they gapped up to 92, actually over 92. Almost 93 in December. Then, of course, everything sold off. So they sold off and it hit a low of 67.5 in January. It looks like their actually 52-week low is 61.5. So that occurred back in October, actually, very briefly. And then they rallied all the way from that January kind of nadir and up again to 894. And they sold off again to 84. It's all over the place, the volatility in this thing. Then they gapped up to 105 in late March. And then they continued gapping up all the way to a 52-week high of nearly 118 in early May before selling off again to where they are right now over the next couple of months, down to 77.5 again. So this is a series of just spikes and sell-offs. This sector is if listeners, you're always looking at tech and biotech and all these other names, pharma for a little bit of volatility. This is the auto sector. is not the big names like the Fords, obviously. Get into the suppliers and the parts and things, and this is some serious untapped, unmined vol. Let's see what someone was mining out here today. Oh, they were doing exactly what we're talking about. They were harvesting a little bit of the old risk premium out here. It was the SEP 65 puts lighting it up today. So I said we're at about 77.5 right now, listeners. So this is a wee bit out of the money, going up 5,144 times for 80 cents, right on the bid. By the way, if you're wondering how wide are these trades, these markets, they're pretty wide. These were 80 cents at $1.60. So our guy didn't even mess around. I'm just hitting that bid. I don't think I can even get 85. I'm going straight to 80. Bam, opening over there on the Philly. Earnings are in November, so this is not an earnings play. Wow, this guy sounds like Mr. Meatball. This guy might have taken or listened to our recent program where you and I discussed this exact thing, this crazy amount of volatility in these auto supplier and related names. Decided A, he's going to harvest a little bit of it, and B, he's drawn a line in the sand, which isn't super outlandish. I mean, the 52-week low is 61.5. He's drawn it at about 64.20. So not super crazy. What do you think about this guy? Obviously, he's taken a little vol in from Auto Home Inc., sir.
Yeah, I guess so. I mean, with such a great description of what the company does, I think a company that why wouldn't you want to go and buy a bunch of vol? I mean, with China, with everything going on in China, I guess that makes sense that you'd want to own some juice, and maybe that's kind of what's happening here a little bit.
No, he was hitting the bid. He's harvesting the old risk premium.
Oh, I'm sorry. You know what? I'm sorry. You're right. That was a good. So that also makes sense because vol's really high in China, and you could, you could have it either way. It's a level where you're, maybe you do want to take some vol, and at these levels, how much worse could China get would be one of your questions. We have no idea what they do? They're a
Chinese auto manufacturing. But yeah, the description literally says a company. So they're Auto Home. I'm assuming it's something to do with the auto space.
It's like we swear we exist.
We're not a tool of the Chinese government at all.
Yeah, the only way that could be better is if they were like, yeah, we're from Canada and you'll never meet us. But I don't know a lot about it, but looking at the volatility here, maybe it makes sense to, if you like the name, to be willing to sell some juice into it.
I found a better description for it now. You ready? They're the leading online destination for automobile consumers in China.
It's like cars.
Yeah, like a
cars.com.
Yeah, exactly. The mission is to enhance the car buying and ownership experience for auto consumers in China. Now, keep in mind, only like the top 0.02% of people can even get like a license to buy a car in China. So that's a small market, but still a small chunk of a huge audience is still big. So yes. Apparently they are the cars.com of China. So there you go. That's a better description than a company.
Yes. So, all right. Well, I get it. And that would, like I said, make some sense. With a lot going on, a lot of fears of slowdowns and trade wars, vol's about as juicy. You would think vol's about as juicy as it's going to get, minus a serious downturn over there. And so, selling some puts here might makes a lot of sense to get some juice and pick your levels.
Yeah, draw your line in the sand, and we'll see. We'll see what's going on with that Chinese economy and how that impacts the car market going. Tell you what, since it's such a fun one, we'll put these in the to be watched category. We shall come back. We shall resume our friend here and see how he fared after his trade, or maybe close to when it's off the table, so we can kind of do some run and gun with it. Let's wrap it up here with. Actually, you know what? We're running late. We've been gabbing a little bit, so I'm gonna really quickly. YPF-SA, vertically integrated Argentine oil and gas company, $11.50 off $5 today. Oh my God, off 30%, and it was deep in the money. Jan 13s. I thought these seemed kind of crazy at the time for $2, nearly $1.90. These are pretty much on the offer, but given the fact that the stock's off $5 today, doesn't seem as crazy as it did. So 2,500 of these bad boys, like paper gobbling them up. Pretty much, it seemed like a pretty meaty stock replacement. Now these are out of the money. So yeah, this name has taken a drubbing today. Maybe we'll put these in the to be watched category as well. But we gotta watch something else, listeners. We gotta watch The Last Emperor because it's Monday. It is time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
Time flies, listeners, when you're talking about unknown Chinese companies. Let's keep on rolling. It's Monday. Uncle Mike's on assignment. The last emperor has gamely volunteered to step into the breach. Mr. Last Emperor, what do you want to educate our audience on today, sir?
Yeah, so first thing I just wanted to mention, you mentioned that Argentinian company, and in preparation for today, before I came into the office, was kind of looking through news wires from around the world. I know that Argentinian stock market took a tumble on the election news. So I know that some of the major ETFs that track Argentina are down anywhere from 20 to 25% today. So kind of might make sense of why that was such a big mover there on your radar.
Yeah, maybe you want to gobble up some calls there, like our friend did.
But what I did want to mention in today's session was specifically, a strategy that I think is very frequently misunderstood. It is one that I have gotten a couple of questions on as of late from Fidelity clients, and I'm not really sure why. Maybe because some newsletters are starting to mention it, and I think that there's a little bit of confusion around it. So I'm going to break it down for us today. We're going to be talking about bearish skip strike synthetic, or not synthetic, but just skip strike butterfly put spread. So skip strike butterfly put spreads, whether they're bearish or bullish, is the thing that, kind of a long or short thing that tends to confuse folks. So let me get right into it, right? What they are is a fancy name for broken wing butterflies. The reason why, obviously, going back to the regular butterfly, why it's called a butterfly, well, probably because the body on the P&L graph kind of looks like a body, and then so that would be your guts, and then the wings sort of resemble the butterfly wings, right? So from the P&L graph, it looks like a butterfly, whether it's long or short. Body, pointing up or down, right? But with a skip strike, we're just basically changing up the wings a little bit, so the wings are not equidistant from the body, and hence, a broken wing butterfly from the P&L chart standpoint of view. Now, the thing that confuses most folks, I think, is that you need to understand that the short version and the long version, right, are both bearish in outlook. And what differentiates the short and the long is whether you're selling the wings and buying the guts, or you're doing the opposite, right? Buying the wings and selling the guts. So we'll talk about the short version today, which would mean that we are buying the guts and selling the wings. But obviously, anything that I'm going to describe, you can just imagine that you're taking the exact opposite stance, in terms of, what affects you in a positive or a negative way, right? So since we're talking about a short version of it, what we're dealing with is selling the closer to the money put, buying the, two of the further out of the money ones, and then skipping a strike or not creating an equidistant, but going down even further and then selling a put down below. Now, the way you can think about it is you can kind of break the strategy apart, and you can think about it as a narrow bull put spread and then a wider, right, bear put spread down below. What are you trying to benefit from in this strategy? Well, you're betting on the fact that the underlying, whatever it is that you're trading, is going to collapse, and it's going to fall much further, right, hopefully, than the shortest or the lowest put that you sold, okay? And generally speaking, you're going to be doing it maybe for a little bit of a debit or a little bit of a credit, just depending on how you're structuring it. I think this is the part where, people get confused. It's like, hey, if I do it for a debit, does that mean long? If I do it for a credit, does that mean short? that really has not much to do with it. You just have to remember the short and long version is differentiated by whether you are buying the wings and selling the guts or vice versa. All right. So in the case of a short broken wing butterfly, what we are trying to benefit from is that collapse in the stock price. And if you're doing it at a little bit of a credit or a little bit of a debit, essentially you have no upside risk. All right. What this trade is really affected by quite a bit between, the point of you putting on the trade and it actually expiring is the implied volatility factor. So generally a short broken wing butterfly is going to be a positive Vega trade. So you would want to be, having an outlook on implied volatility to be increasing. Obviously, it generally matches the sentiment if, you're trading something that has that sort of a setup where, generally the broader market participants are actually long it. Therefore, when stock price actually goes lower, implied volatility rises, right? It would be the opposite for, something that has, a different type of structure, right? So I'm talking about the majority of equities have that inverse relationship most of the time where, price drops, implied volatility rises. If price rises very rapidly or maybe, kind of stair steps higher and higher, implied volatility tends to be subdued and tends to go lower, right? So you're betting on the fact that the price is going to collapse and therefore implied volatility is going to rise. So you're going to benefit from that positive Vega sort of a setup. Now, where we generally see people do these sorts of trades is maybe a little bit ahead of earnings in individual names, where implied volatility tends to rise into an earnings event. And, if the underlying kind of trades in a range or is not really, in a strong trend, right, up or down, but rather sideways, this sort of a thing could probably pay off because implied volatility tends to rise into an event. And maybe you have some sort of a parameter in place for, a profit target, right? You might be taking it off right before an earnings announcement or something of that sort. What's the risk here, right? Well, the risk is obviously the fact that the underlying does not go down a whole lot. So, the risk is from the closest to the money put that you're selling to that, to those long puts that you're actually buying, right? So the risk is in the bull's put spread part of the butterfly itself. If you're doing the long version of it, obviously your outlook is still bearish, is just not as bearish as it would be if you were buying the guts. All right. So in the long version, you will be benefiting from a price decline, up to the short strikes, the body that you're actually selling in that case. This is quite a complex, I would say, maybe a more advanced strategy. We don't, often see people engage in these types of things, probably more of a, professional trader type of setup. But that doesn't mean that it should scare you. What I would advise everyone in the audience doing is just try to play around with the numbers. Here at Fidelity, I know we've talked about this tool before. We have the profit and loss calculator tool, which basically encapsulates the Black-Scholes option pricing model. And you're able to simulate a trade, set it up kind of as a paper trade, and then play around with the inputs into the Black-Scholes. What happens if the price goes to a certain level by a certain date and implied volatility changes? What I love about this tool, the Profit and Loss Calculator in Active Trader Pro, is that it nets out all the Greeks for you. And Mark could probably attest to this. If you're a professional trader and you have hundreds of positions on, you can't really worry about what the name of the strategy is. That doesn't really matter. What matters is what your Greek exposures are, right? What's your exposure to vol, i.e. Vega? What's your exposure to, time decay, theta, and how much delta you have in it? So this tool really allows you to look at it holistically at once. And, the prior conversations over the past couple of weeks that I've had with our clients here, I've been able to, kind of replicate what their thoughts were in the P&L with them. And it really made a lot of sense. They were like, oh, okay, kind of a light bulb goes off. I see what the differences are and, what the benefits and what the risks are exactly, right, in dollar terms, before you maybe, dip your feet in the water. All right? So if you have questions about more complex strategies like this would be, my suggestion. Just throw it into P&L, play around with the numbers. It really starts to make a whole lot more sense if you do that first.
That music, unfortunately, means we're done, listeners. All right, let's go back around the horn. Let's start with Mr. Meatball. Mr. Meatball, a topsy-turvy week. The market's kind of on edge right now, but maybe not as much as you might think. What are you watching for the rest of this week? And also, maybe listeners are intrigued. Maybe they want to check out your upcoming volatility in auto parts and Chinese auto manufacturer type names. Where should they go? What should they do, sir?
Yeah, we've got more earnings. We've got more Hong Kong protests. You name it. I think it's going to be an interesting couple of days. I did a webinar on VIX, and what I'm looking and trading right now, you can go to www.optionpick.com/Kramer and see the webinar and sign up for a special offer. In addition, I'm probably helping out with Off the Charts on Mad Money on CNBC tomorrow night. So get your eyes out for that one.
There you go. Keep your eyes peeled for the Meatball. And meanwhile, of course, check out optionpit.com. That's the place to go. Look on the old YouTubes for the Meatball out there as well. And a lot of you have been subscribing to our YouTube channel of late. Speaking of YouTube, we don't really put a lot out there yet. We're toying with ways to do it. Some of our shows go out through an automated process out to that platform, but it's not concerted effort on our parts by any means. But if you guys like that, we're thinking about adding a lot more to that. So if you want to subscribe, head on over there. Find us, the Options Insider, on YouTube. And we do have a lot of you doing that, even though we haven't really mentioned it at all. I think we're going to restructure how our shows go out there and maybe have more of them going out there. And some of these transitions we have cause issues with YouTube, so we're working on all that. But yeah, if you want more of that, we can maybe deliver that for you too. And last but not least, Mr. Konstantin, you kind of just mentioned, first off, look really quick, what are you watching for this week? And you kind of just mentioned kind of the active trader platform. If folks want to kick the tires for themselves, where should they go? What should they do?
Yeah, guys, absolutely. Watching some earnings this week. Macy's, Walmart, and Baba were the top three names that I'm going to be looking at. I know that there's inflation data coming out tomorrow morning, so keeping an eye on that. And just a slew of economic data going to be released on Thursday. That's actually when Walmart is announcing. So, we'll see if we continue to, see the strong consumer, right, kind of kicking into gear into the late summer months. What I am going to suggest to everybody is that if you are interested in learning more about complex strategies or simple ones, please don't hesitate to reach out to us. You can obviously become a Fidelity client by going to fidelity.com/options, opening an account, applying for options trading there. Fidelity.com/coaching, of course, is where we live most of the time, kind of doing these, small classroom time setups where we screen share a platform and show you how it works, and hopefully answering your questions as well. So be a pleasure to speak with you. You can always ask for me by name. I'm the only one here at Fidelity with this name, so it shouldn't be hard to find.
There you go. Fidelity.com/options is the place to go to kick the tires and light the fires, and then contact them and say, hey, I want not just Konstantin, tell them you want the last emperor. You know exactly, and they'll know exactly where you're coming from. And on behalf of the last emperor and the Greases and Meatballs, I want to thank all of you for downloading, streaming, subscribing. If you're listening live, stay tuned. We'll be back in about 55 minutes or so. I'm not sure if there'll be stuff in between. I don't think so, because you have to rejigger a little bit in here. But we'll be back. It's going to be a good one. The crypto rundown. We're going to talk to the crypto mom herself, a.k.a. Hester Peirce, a.k.a. the SEC commissioner over there, who actually kind of gets crypto. So if you want to know why isn't there a Bitcoin ETF, we ask her that. If you want to know maybe what's going on, why don't we have the options? Why aren't there more products to trade, crypto derivatives, futures, and things? We ask her that too. And spoiler alert, maybe a little bit towards the end, maybe we even get to a little bit of XIV and some of the inverse vol and all the other good stuff you guys love. So it's a cool one. Stay tuned for that. If you're listening live, that'll be about 55 minutes from now. Otherwise, if you're listening after the fact, just hit the next show because it's a good one, the Crypto Rundown. And we'll see you back here on Thursday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.